Did you know that one of the greatest assets in the world is yourself? But you know what else is great? Great companies. Today I'm going to be talking about some of the great companies that I own and why I just bought more ownership of specifically one, even though the price is much higher than my original. So, like I said, stock investment, real estate, cryptocurrency, and other types of side businesses, they're a great way of getting you to financial freedom, like all of us want to reach. And today I want to relate it to an asset that I think would be one of the big stepping stones in helping me reach financial freedom, and that is increasing my finance assets. So, if you don't know, the economy right now, especially in America, their retail sales has just released, and it expected a much bigger drop month to month sale in December compared to November. So the sale drop was about 1.9% compared to November, and this was the first monthly drop since July and the biggest decline since February time. You would think in December that it wouldn't go through that big of a drop because you have the holidays and you have people giving gifts and all. That should be a month where retail sales wouldn't go down in a way, but it feels like a lot of consumers are spending less. As you can see here, by the category, e-commerce stores saw the biggest drop in monthly retail sales, about 8.7% down in December. Department stores also dropped about 7%, and then furniture and home stores dropped about 5.5%. The report also says the weakness was more general based in December for mostly all categories of retails, and this has caused a shock effect to all retail companies. Most retail companies that you see today, they're going to go down from this report. But there's particularly one company which I saw went down a lot more compared to the others, and why I felt it was a really great opportunity to buy into more. The company I'm talking about is Revolve Group. If you don't know Revolve Group, it is a online Gen Z millennial woman fashion company, and they specialize in the luxury wear. I started knowing a little bit about this company since 2019 2020, and I bought in 2020, and I remember buying in when it was like pandemic times, around like $12-13, and I've been holding it as an asset because I feel like this company has great potential to be one of the most successful retailers in North America and internationally and international wide. So even though the company's value went all the way up to 80 something dollars just a few months ago in a way, I didn't even sell out of it because I felt the potential is so big for this company. Management has done a fabulous job, especially with the hiring of Kendall Jenner, and I saw this as a opportunity to actually buy more instead of selling out. As you see, this is a 10% drop, and I did some research comparing it to other types of peers and competitors in their retail e-commerce field, and as you can see, I compared it to Farfetch, another luxury company as well, as you can see here, and somewhat comparing it to a peer called Lululemon. Of course, Lululemon, they're more of a fashionable sports clothing wear, right? But comparing it to companies, that are, in that space is very important to see, whether it's actually attractive, how are they doing against peers and competitors. So I did some research as well. First off, I made a nice chart, and I hope you guys can take a look at it because it's much easier to look at. So first off, I compared all of their market value, okay? Today's price. We have Revolve, a $3.4 billion company, which is a small retailer, you can say. Farfetch, a $10 billion company, which is more of a medium size in a way. And you have Lululemon, a large size company that's worth about 42.5 billion. Now, of course, Lululemon is definitely much more established compared to the other ones. And the thing is, being more established doesn't really exactly mean you're gonna go through more sales growth, right? But what it is that I compared their 2021 revenue, the average revenue, and you can see here, these are the numbers right here, and also their price to sales ratio, which is their current market value compared to the average yearly revenue. And as you can see, comparing these three companies, Revolve has the cheapest. Now, does that mean it's an instant buy? No, there's many things to look at, but just comparing it to its market value to its sales, it's cheap, okay? And you look at its sales projection for this year, especially the growth, 23% for Revolve, Farfetch a nice 26.5%, and Lululemon's a bit lower, about 17%. But regardless, all three companies are expected to grow, all right? And so that's something I want to look at too. I also wanted to look at the net income for last year until the third quarter, because all their fourth quarter earnings hasn't been released yet. And out of these three companies, only two were profitable, and that's Revolve and Lululemon. Now, Farfetch, they lost about $1.3 billion up to the third quarter of last year, okay? We don't know how they're going to do in the fourth quarter, but they're expected to still lose money in that. So when I did the price and earnings ratio for 2021, I came out with this, okay? Using their market value, comparing it to their net income. Cheapest is Revolve at 48.5, and then Lululemon 78, and then Farfetch, which doesn't really have a price to earnings ratio, but I just did it as a negative, so they're really far off from profitability. Now, when I compared these three companies and how management has done, I felt there's a greater potential in owning Revolve. It's in terms of value increase, in terms of sales, and in terms of their profitability the next 5 to 10 years. As a long-term investor, this matters to me a lot more, okay? And I felt, you know what? Today's price action dropping about 10%. I shouldn't sit around and just not do anything. That's what it is. The worst thing I could do is probably sell out today, okay? If I did sell out, I would have sold out around $80-something. But I see the huge potential in this company to be one of the most successful, most popular North American retail brands in the next few years to 10 years, okay? You're gonna hear this name a lot more. I see a much higher opportunity, a 5 to 10 times opportunity of growth for this company in the long term. And so that's why, even though I bought this company initially at such a low price, buying more today, it's going through that ego. Like I said, I went through that ego of, I like to buy things at cheaper valuation. Obviously I hope it would go down to 13, the $10 value and stuff, but that's irrational thinking. This feels like it's even, it's 2 or 3 times more than my initial price. And so you might be thinking this is irrational buying, but no. At this current valuation, it's attractive, and I'm gonna continually to buy more the more it goes down. And obviously one of the biggest reasons why it went down is because now the narrative is that for the fourth quarter, their projected fourth quarter earning about $218 million isn't probably gonna get achieved, because of this terrible retail sales drop. And so that's what it is. I think Revolve has great management, and I believe they are actually going to meet expectations. They are going to experience a decline. Ever since I've invested in it, I don't see them ever. I haven't seen them actually miss a quarterly earnings. okay, in terms of revenue. Sure, for net incomes they have, but in terms of revenue, they've always done terrific. And this, in the end, goes back to owning great assets as a way of reaching financial freedom, right? You are your greatest asset, but also great companies are some of the greatest assets that you can hold too. Because when you own great companies, your financial value also increases. Okay. In the short term, maybe not, but in long term, all great companies have higher value in themselves. Okay, especially finance-wise. So that's why I bought more today, and obviously it's one of my favorite companies that I own, and also some of my favorite brands as well. So thank you very much for listening today. Hope you all, get yourself more open-minded to, in a way, owning assets. Obviously improving yourself first, and thinking about owning other assets that you feel could really change your life. Yeah, this company is one of them. So thank you very much. It's been a long video, and I hope you all have a beautiful day. Take care.